Hey everybody, hi, my name is Darius Anucauskas and I'm the global market analyst here at Markets.com. Look, it is the end of the week and it's the end of the month, and what kind of an end are we getting? Honestly, the market is going crazy. Cryptos are dropping, NVIDIA is falling, indices are sliding. Yeah, a lot of interesting stuff happening. So look, stay tuned. Hopefully you'll enjoy the session. We'll talk about all this and a little bit more, and I'll see you in a bit. Okay, ladies and gentlemen, hello everybody. Hi, my name is Darius Anucauskas and I'm the global market analyst here at Markets.com. So, as I already said in the intro, which you've probably watched, wow, what kind of a month are we having, especially the last 2 days of this month. I mean, look, the markets are going crazy right now. I think there's a lot of things to discuss, but look, before we jump into anything like that, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendations and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. Look, I'll give you a few seconds to read the rest. I'm not going to disappear anywhere, basically, but yes, I mean, today is just for someone who forgot. Today's Friday, ladies and gentlemen. Today's the 28th of February, so the last trading day of the week, of the month. And I mean, wow, what kind of a day we're getting, right? Look, also, before we jump into the charts, just a quick mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. So, ladies and gentlemen, let's have a look what's happening here. First of all, I want to pick up on the Japanese Nikkei. Now, before I jump into the economic data, which I kind of warned you about, yesterday I did this little piece on YouTube on our channel, which you can, always have a look at. Basically, I was talking about the economic data. Now, but I also want to pick up first on the technical scenario, because the technical scenario worked out like a charm, to be honest, because what I said to you a while ago and from the beginning of from already since I started running these MarketsTalk videos, I have been telling you that keep your eyes on this little formation here. Now, according to all the TE rules, technical analysis rules, such patterns, which are the ascending triangle patterns, should break out to the upside. However, as I kept on warning you, I was telling you that, look, ladies and gentlemen, wait for the breakout, wait for the number, wait for that move first, and then you can do something about it if you're comfortable with it. So, and you can see that this broke out to the downside. It broke below the 200-day EMA, which, I don't know, you probably cannot see it, but it's there. It's this white line, the 200-day, which now coincides beautifully with the upside line, which, still does. And we broke that upside line, broke the 200-day EMA, we drifted lower. We then revisited the broken trend line. By the way, whoever has been watching me for quite a while now, and also I keep on saying to you, ladies and gentlemen, that whenever we break a trend line, there is a tendency to revisit it from the other side. And it's not like a rule or anything, no, but it seems like at some point we do revisit that broken trend line. And in this case, like I said, the technical scenario worked out perfectly. Now, what I was saying before, that if we do break through the 40,000 kind of 300 territory right here, then yes, I'll get a little bit more excited with the upside. But if we start clearing this upside line together with all the EMAs, now this is opening for me the door towards some lower levels. For example, like this one right there, 37,270, something like this zone here, which basically, congratulations to all those. It's a perfect hit. Boom, fantastic, let's move on. Now the question for me is, are we gonna stay here below this hurdle, or actually we're gonna stay, if we're gonna see the body of the daily candle staying above this area? Well, let's not rush into this. First, let's of course, right now at the moment we're more bearish than bullish, but let's not rush into things yet. Let's see how this is going to play out, because again, what I'm worried about, that from the technical perspective, I mean, this could end up being this, basically a range. Now, this upside line has to go. It's no longer needed. Thank you very much. For a few months, it did its job and it helped us out. We really utilized it a lot, and now it can turn into a downside line like this. So this is what I'm, like I said, this is what I'm going to be keeping an eye on. And if I'm looking at some higher levels within this potential range, then a break above this downside line isn't required. So because at the same time we could break above all the EMAs, look how all the stars are aligning perfectly. We could also break above all the EMAs here, and this could open the door to some higher levels here within the potential range. Because again, why I'm saying potential range, because it's still not confirmed. I mean, is this going to support this? I mean, is this going to respect this area, or actually is this just going to be like a little, temporary obstacle on the way lower? Now, for now, we are, like I said, we're leaning towards the downside, but very, very carefully and cautiously. Oh, by the way, I think I forgot to mention the usual good morning in the chat room, everyone. Hey, look, if anybody has any questions, whoever's tuning in right now, feel free. Honestly, I do have a lot of instruments to go through in this next hour, and I think a lot of things here to be mentioned. Now, jumping into the economic data. Now, this is what I was talking about yesterday. So look, the core and the headline Tokyo CPIs came out. Those came out on the lower side. So as you can see there, the core came out at 2.2 right there, and the headline came out at 2.9. Now, I was kind of hoping to see a higher number. I will admit that, but hey, we got a surprise. So in a way, the BOJ is not really probably very happy about this, because they're really looking forward to all the data to be in favor for them to go and hike. Now there's a little bit of a slowdown. It's not really good, especially looking at the industrial production numbers here as well. The month-on-month, it dropped. However, okay, the year-on-year is still good. It's quite good, I would say. Retail sales 3.9, good as well. So, okay, maybe they might say, you know what, Tokyo maybe not the most important. Maybe let's focus on the overall Japanese inflation, which has been on the higher side. So maybe that would be enough for them to to go for those hikes. We'll see. But for now, the situation here with the Japanese index, with Nikkei 225, it's this that we are near this key area of support. Let's see if it holds. If it does, great, wonderful. We could maybe consider a bit of a rebound going into next week. However, if it doesn't, examining the downside scenario. Australian index, look at this. So far, so good. Technical scenario is working out perfectly. I talked about it, and we broke my upside line. So far, so good. We're on the right track. I think we could end up testing that 200-day EMA together with that 8,130 zone right there somewhere, which in a way, look, I'm not saying that this is like the best level to watch. No, I'm just picking up basically just because it purely coincides with the 200-day EMA. Nothing really, it is an important area, but I think that for me, the more important area is around the 8,000 zone, but that's already below the 200-day EMA. So that's why I don't want to mix it too much. I'm just aiming for now for the 200-day EMA shown as the white line here, and then we'll go from there. In terms of the upside on this index, well, like can I say? I mean, I think I would prefer to wait until we get a push back above the upside line and back above all the EMAs on the daily chart. This way, we could also climb back above this little hurdle. Now, again, I keep on saying this is, this level I have here at 8,373. That's not exactly the level. You always look at the area around the level. So it's like, you examine, it's the same, like I said, with Japanese Nikkei here. Also, yes, I have it at around 37,000, kind of 269.70 zone, but still it's more of an area. So we're keeping a close eye on that one. And the same story here right now. ASX 200 aiming for this area. Let's see if we can get a nice test. China 50. Now this one is look, I like it. I really do. Because why? Because it's holding on. Yes, there are issues right now in the U.S. You know, like all the tariffs, and you know, everybody's like, you know, the U.S. is trying to pour a lot of bad things on China in a way, because you know, with the DeepSeek, because everybody's trying to maintain their AI dominance. You know, however, I think that China is slowly just showing that, hey, things are possible to do it differently. So, and this is what I think that the U.S. market doesn't like, you know, or the leadership doesn't like. So, look, what can I say? For now, I would say it this way, that China 50 index still holding on. It's still holding above all my EMAs on the daily chart. So the 50, the 100, and the 200-day EMA. On this daily chart, by the way, all my charts, all the charts that I'm looking at are the daily ones, because I think that, in my opinion, this is the best way to kind of see what's happening, you know, over time, let's say over the week, over the month, and this way you can actually build a better, more clear picture in terms of where could, you know, things go. So, long story short, as you can see, after we broke above the upper side of this little range here, you know what? Let me just do this very quickly. So basically, this is what I was looking at before this range here. Let me just reduce the brightness here a little bit. 15, I think that's enough. 14, yeah. Yep, now, I mean, after we broke this little range here, we moved higher, but then we started creating a new range, as you can see right there. So previously I had this 13,716 level in my mind. I still do. However, I think that what I would like to see now is a break. Let me just grab a line. Let me just grab a horizontal line. There we go. 13,000 kind of 500 zone. If we can get a nice clearance of that area, amazing. I will consider a move to the upside, and then we'll go from there. But at this point, like I said, we are still in a range, so let's not rush into things. If by any chance this starts falling off the cliff here and, you know, falls below the 50-day EMA and falls below this 13,000 kind of 13,150 territory, somewhere around here, amazing, I will consider a move lower. Let's jump into the US world, ladies and gentlemen. I mean, this is madness, at least for them. And they're like, I mean, indices are, you know, sliding, but again, look, I mean, they're sliding. They're going for it. Maybe they're going just for correction, you know. It's all fine. You had these rallies, you had these strong rallies, which is fine, which is okay. Now maybe we're seeing a little bit of, you know, retracement. It's also, like I said, it's also fine. It's also okay. You cannot really constantly buy stocks which are at their tops, you know. So, and looking at this picture here, I mean, Dow is drifting away from this key resistance area, which is the current all-time high, near the slightly above that 45,000 zone. And yep, we're approaching my upside line, which I talked about a while ago, and I'm still, you know, having this one in mind here. This upside line is drawn from the lowest point of October of 2023, ladies and gentlemen, and that's like I said, that's my target for now. I want to see if we're going to get a rebound or not, but if we do start getting a clearance of that upside line, then certainly, yes, of course, it opens the door for a possible move towards the 200-day EMA right there. So, and then we'll go from there. But at the moment, like I said, very careful. I'm very careful, very cautious. Today we're getting the PCEs, but look, I'll jump into the PCs when I'll jump into the dollar index. For now, let's just, like I said, just looking at the indices. Here, the situation, like I said, is the main focus is tariffs, and yep, at the moment, tariffs are the driving force. It seems like that. We know that on the 4th of March, if I'm not mistaken, let me just double check very quickly. On the 4th of March, the 25% tariffs on Canada and Mexico are going into force from the US. So, okay, like I said, we'll see how that plays out. Maybe there's going to be a delay of some sort. Who knows? But hey, at the moment, that's the target, that's the game, that's the that's the situation we are living in right now. So anyway, the S&P 500, beautiful breakout, amazing, everything's working according to the plan, and I'm leaning still towards the downside. Look, the next target for me is somewhere around here, this 5,700 and kind of 69, 70 zone, but also I'm keeping an eye on the 200-day EMA, which is around here, which could be also a good target. Like I said, today we're getting the PCEs, but I'll get to those in a bit when I'll jump into the US dollar. For now, looking at this picture, yes, everything is looking quite nice here. Maybe we could actually also look at not only this, but we can also, okay, this upside line got broken, so we can get rid of it. Maybe we have ourselves something of a, of a rising channel here, like something like this. Let's see if this is going to work. I mean, it's not picture perfect, but hey, could be the case, right? Maybe it's not even the rising channel. Maybe it's a rising wedge pattern, very wide and very how to say it? It doesn't really, it's not very pointy. So maybe it's not even going to be a a rising wedge. Which, according to all the TA rules, kind of tends to break to the downside here. But you know what? Let's not rush into this. Let's maybe actually put this one as a rising channel. Let me just try to see if this is gonna work or not. Oh, what's happening here? Why is this like this? Why is this like this? What's happening here? Okay, I see. The line is dark for some reason. What? Okay, just a sec. Wait, why is this like this? I see, that's why. That's why. There we go. So, there we go. Yes, there we go. So, this is what I'm talking about. So, maybe this could be, this. Again, it's not picture perfect because we're having like some violations here. So, maybe, like this is just purely for an idea. Now, if we do clear, like I said, if we do clear the lower side of this rising channel, then yes, it opens the door towards these areas, which I already talked about. But again, let's not rush into things for now. Let's maybe keep an eye on this one. Let's initially maybe target the lower side of this rising channel, and then we'll go from there. If we start clearing it, perfect. Like I said, we're gonna go further south. But if it finds good support somehow here, maybe a little bit of a rebound here could be possible. However, for me to get comfortable with the upside on this one, and you can see clearly, I would need to see a push back above the midpoint of this rising channel. At the same time, we could clear all the EMAs on my daily chart, and amazing. I mean, potentially more buyers could join in. NASDAQ is not feeling the love as well. Look at this. After creating a new all-time high, we are selling off rapidly, and it seems like we are traveling towards that psychological 20,000 zone. Well, the question is, are we going to reach that, or actually we're going to see a slowdown somewhere near this 200-day EMA, which is rough at this point, at this time of analysis. It's somewhere around the 20,211 zone. This is what I'm going to aim for, and yep, for now, like I said, this is what I'm going to keep an eye on. We are clearing this area as well, it seems like, or sorry, we cleared it, this 20,525 area. That's the lowest point of January of this year, and yeah, basically we created a new low for this year. There we go. That's quite interesting. Another thing to mention, some of you are probably thinking, hey, isn't this like a nice little, double top pattern? Well, it could be, but I mean, depends on how you're going to draw this. If you're going to draw it this way, then okay, maybe, maybe this could be like seen, but then you have this violation right there, so which is not really like, according to all the textbooks. So I'm just, okay, I'm keeping this in mind. I'm keeping the double top in mind, but again, let's not rush into things. Let's keep an eye on maybe this just previous lowest point of this year. If we do stay below it, then great, we could go for another low, for this year. But again, let's not rush into things. For now, like I said, just go slowly on this. It's the last trading day of the of the month. So keep an element of surprise always in in your pocket. Dollar index, and straight away I want to jump into the US PCEs, which are coming out today, ladies and gentlemen. That's something that the market is keeping a very close eye on. As I already mentioned in one of my videos on YouTube, on our channel, you can check it out. It was a separate analysis done on the US PCs, but basically, quickly summary, like, look, we're expecting a lower number. The core one is expected to come out at 2.6 against the previous 2.8. The headline one is expected to, where's that number? Where is that? There we go. It's to come out to drop by 1/10%. So my problem is that we are expecting the PCs to come out lower. However, inflation has been on a rise lately, and it's going to be quite interesting to see if actually it comes out lower. Because if it does come out lower, then it supports the Fed's it supports the Fed's idea of going for those 2 hikes by the end of this year. Let me just show you what I'm talking about. So as you can see right now, the percentage is 31%. So if we do see a lower number on the PCE, then in a way this kind of keeps this on the table. It keeps this the 2 hikes. The 2 cuts on the table for now, and everybody's happy in a way. Maybe this could actually help the US indices to stabilize and push back up. However, if the PCE comes out on the higher side, I really doubt that maybe this could be somewhat of a positive thing. However, look, things happen, surprises do happen. So I always keep saying to everybody, look, even though you're thinking that this should, if this comes out this way, it should, the market should react that way. Unfortunately, it doesn't always happen like this. So sometimes we get the data, it's totally, and then we get a total opposite reaction to what normally should happen. And then actually after some point, you actually start figuring it out that, oh, it was that little thing that caused, right, okay, that's what the market picked up on, right, okay. So that's why I'm saying you never know. And for now, looking at this picture here, look, the DXY is popping higher, and I think the fact that why DXY is is moving nicely to the upside here is mainly on the kind of safe haven aspect, because as we know that the dollar is also seen as a safe haven together with the Japanese yen, which I'll get to in a bit as well. And yep, that's why maybe we're seeing some action here to the upside. So maybe because the market is expecting slightly higher PCs, who knows? We'll see. Let's see what's going to happen. If I'm kind of, like I said, leaning a little bit towards slightly high. Well, I'm leaning actually more towards the same number as previous. So it basically would come out higher than the forecast. So this maybe couldn't have that positive reaction. But again, let's see what's going to happen. For now, I'm just observing the price action, and I'm just observing what's happening here. So I said to you before that I will lean a little bit more towards the upside if we do push above the 107.5 zone here, and then we'll go from there. The German index DAX. Let's have a look. So this one is a little bit on a roller coaster ride as well. So we had a good run here on Wednesday. Look at this, we pushed higher. It seemed like, are we gonna go for a new all-time high? Or actually this is just a little temporary correction before another slide. Well, we started moving back down and we broke this short-term upside support line taken from the low the 13th of January. So in a way, I would say normally, this is pointing a little bit more towards the down. So yes, I'm going to say I'm cautiously bearish. I'm going to get a little bit more bearish if we're going to drop below last week's low, which is around the 22,116 zone here on the cash index. And then, yeah, we'll go from there. So long story short, I would say if we can drop below this 22,116, yes, I'm getting a little bit more excited with the downside, because a forthcoming lower low is confirmed. In terms of economic data from Europe, let's have a look at what's happening today. Are we getting anything exciting? Right, okay, so German job numbers. I think that, yes, at the end of this webinar, we'll get the German job numbers together with some of the with the inflation number from Germany later on. Yes, Saxony, from different regions, we're getting the inflation numbers, and then I think we'll have a total sum up of the German inflation, which yeah, it will come out later on today, so keep that in mind. Most of the time the number comes out as expected, so nothing major there, and you know, it's kind of sometimes a little bit on the boring side, but look, but if it somehow deviates from that 2.3%, hey, maybe this is where, you know, some action could kick in into DAX, especially given the fact that it's also the last trading day of the month. Finally, on the indices side, and then we can move on to Forex, cryptos, and commodities. Basically, the last thing is the FTSE here. You can see that it's pushing back up. What can I say? It pushed, you know, it pushed above this downside line. That's fine. It's okay. It's kind of pointing a little bit more towards the upside, to be honest. This downside line, I think, no longer needed. I think we can just focus on some of the key support levels. I think that this would be a little bit of a more safe option, because at the moment the trend lines are not working. So if it's not working, honestly, like, don't be tied up to things, you know, abandon it. Just kind of, I'm talking about purely technical analysis, of course. Yes, I mean, this is here, you know, like if I'm looking at, like I said, the upside. For me, the breakout here, the 8,782, that's what I need to see, a break off in order to get maybe a little bit more comfortable with the upside. But again, while we remain in this territory, I'm just going to observe the price action, and I'm going to take a very conservative approach here in terms of the downside. A drop below the 8,610 zone could do the trick for a few more sellers. Ladies and gentlemen, let's jump into you know what, into the Forex world very quickly. Just a quick update on AUDUSD. There we go. Of course, logically speaking, here we are getting, you know, what we're getting here, what we're seeing. So a drop in the a pickup in the DXY and the dollar index is, you know, playing out negatively here for this pair, and we're seeing a nice good drop. So what I talked about before, I said to you that if we do fall back below all my EMAs, I'm leaning towards the downside tick. I wouldn't say mission accomplished. I mean, I'm still targeting the 0.6170 territory, somewhere around here, and that's the lowest point of October of 2022. Or even, I should say, the lowest point of 2022. I'm aiming for that one, and then we'll see. Maybe if we break that one, great, I'll go lower. But if we don't, I'll reevaluate things again. AUDJPY. This one continues to slide. So far, so good. Of course, our risk on, risk off monitor, which is the AUDJPY pair. Yep, it's showing that nothing is very, very good. Not everything is very positive in the market right now. So yes, we're seeing that decline. I think that this could stay like this unless indices start reversing back to the upside. NZD, similar story as with the AUDUSD. So also from the technical side, it's dropping below my 0.5692 territory, which is fine. Quite happy with it. And yep, so far, look, okay. In terms of where it could go further, I think at this point, if you, for example, missed this, you know, this breakout here, look, that's fine. Leave it. No harm done. I think that, you know, at the moment we're going to be resting near the 0.56 territory somewhere here. And if we do clear that, then okay, then this is where, you know, we could see a move towards the current lowest point of this year, near the 0.5515 area. But if that gets cleared, of course, you know, further declines are possible, a new low established for the year, and blah, 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 right? But for now, we're just observing this. Let's not rush into things. And yep, for now, let's see if we can get a rebound. And most importantly, if you are trading NZD-USD or AUDUSD, keep your eyes today on the US PCEs. Because that one, like I said, at the moment, I think we reached a target. Now we're going to be just stalling here somewhere until we get the US PCEs. Let's jump into USDJPY actually, very quickly. Beautiful rebound here. Yes, the dollar seems to be picking up more pace. Of course, the Japanese yen is not very happy with the with the Tokyo CPIs, which came out on the lower side. So in a way, it's kind of not in favor of the Japanese yen, and this is the reaction we're getting. Now I threw out this piece recently, and it's kind of mentioned that look, USDJPY, yes, we're near key support zone. We're kind of bouncing around that, around this, near this 148.63 territory right here. So we're getting that rebound, absolutely fine. All okay, but again, am I getting very comfortable, very positive? No, not yet, because I need a break of this downside line here, taken from the high of the 10th of January, and also a push above all the EMAs on my daily chart. This way, hey, I'll get a little bit more positive if I see that move. For the downside, a drop below the 148.63 territory right here could be nice. So a nice good drop below that, yes, would confirm a forthcoming lower low. US dollar against the Canadian dollar. There we go. Boom. So what are we getting today from Canada? Well, we're getting the GDP number. So when we're going to get the PCEs from the US, at the same time we're going to get the Canadian GDP numbers. Now, at the moment, the forecast for a month-on-month number is on the higher side. The growth rate annualized is also expected to like almost double in a way. So quite a ambitious target here. So let's see if that's going to be met. But at the moment, of course, in this situation here, we can see that the Canadian dollar has been devaluating, and look, I'll jump into oil in a bit, and I'll explain why. Yep, you can see here the situation. We reached, from the technical perspective, we reached one of my targets, the 1.4447-ish kind of zone here. Because what I said to you before, that if we do pop above this 1.4260, I'll aim for this area. Boom, boom, we fantastically hit that area. So now the question is like, what's going to happen next? Are we going to go further north or not? Well, at this point, I would leave it. I would leave it because, and even actually, I would leave it for next week. Even with today's numbers, I would take it, very carefully, because again, it could be a bit of a roller coaster ride, and I don't want to get like sick by the end of the month, right? From a crazy roller coaster ride. I want to, I want to enjoy the end of my month. So I would, like I said, I would not touch it, and I would just, just keep an eye on this. Maybe we could aim for this 1.4466 zone here, ish. But then again, it becomes all very subjective. I mean, in general, everything is subjective. But we try to find some sort of logic in general in things. But I would say here, look, maybe this could be the target. But again, I think that the 1.45 is the more psychological level to watch. So in general, if some of you watched my webinars in the past, what I said before with USDCAD, this pair does love these nice, beautiful psychological levels, like, or these nice even numbers, sorry, not even, but these like good numbers like 1.45, 1.46, 47, 30, 40, and it does kind of like this from my experience in the past. I mean, like I said, yes, and we could, like I said, we could see those, we could see that 145 level getting tested. Oh, Jindao, hey, good morning. Always happy to see you there. Always the person who, brightens up my chat here, my live chat. Thank you very much. End of month safe, start next month strong. Yes, for sure. Like, exactly, like that. This is the thing. Sometimes, people get caught in this kind of trading where they trade the whole month. They're fantastic, they're doing great results, and then you come to a month like a day like this, like where you get the last trading day of the week, last trading day of the month. I mean, we're having craziness in the market, and everybody's like, well, I did good the whole month, right? I mean, I'm surely gonna do good on, on the last day, especially given that it's like, we're getting good data and stuff. And this is, like I said, this is that level of arrogance that kind of kills your account eventually. So yeah, just kind of be cautious, be careful with that. And most importantly, not with the market, be cautious with yourself. And that's that's something that I keep on practicing and keep on telling other people and other analysts and in general everybody, so that you you yourself are sometimes the biggest enemy to yourself. So yeah, when in regards to when it comes to trading. So now USDCAD, like I said, that's the situation here. USDCHF, okay, yeah, a copy of a DXY. Okay, we're seeing a push back up. That's fine. I don't even want to actually talk about this one in US dollar against the Indian rupee. So by the way, how did the month end here? For okay, another little devaluation, but what's interesting here, we're a little bit more, I would say we're getting a doji, but it's not really super awesome doji here. But anyway, yeah, I mean, look, maybe this could end up traveling back down at some point. Let's see. Euro USD, very quickly, because I want to quickly run through these. Beautiful drop. There we go. There we go. I talked about Euro USD. When did I mention USD? There we go. This was the analysis here on TradingView. I picked up on it, and I talked a lot about this, you know, about the upcoming PCEs and the ECB rate as well. So far so good. Quite happy with this actually, because this is actually dropping below the 1.0442, which I talked about, dropping below all my EMAs on the daily chart. Amazing, amazing. So yep, I'm leaning a little bit more towards the downside. However, although I'm in my head, I'm leaning towards the downside, but I'm not going to be touching it at all because of, like I said, because of this day, and like, I mean, the way everything's shaping up, the way everything's moving, it's way too crazy, and it's way too volatile, and honestly, I just don't want to risk anything here. So yeah, for now, looking at the picture here, yes, it is quite interesting. It's pointing more towards the downside. So hey, let's see if that can go further south. EUROJPY, beautiful, beautiful, amazing. There we go. We got that clearance of my 155.45 level. I talked about this one yesterday in my webinar, sorry, my YouTube video, separate one. On the Japanese data, and there we go. We got that breakout, but we got a false breakout. So this is, you know, this is what I keep on saying. Wait for that body of the daily candle to stay below this hurdle, and then we can do something about it. But at this point, we have created a nice, beautiful breakout. So now the question is, can we get a nice push back to the upside? So, long story short, for now, it's like I said, it's an interesting moment here, and it seems like we are leaning towards, you know, well, I'm still leaning towards the downside, but at the moment we're getting a rebound. I'm not saying that I'm getting very positive. No, for me, honestly, the positivity here should be somewhere, you know, above at least one of the EMAs on the daily chart. GBPUSD, we're falling lower, so now I have this Fibonacci retracement, which has been drawn here from the highest point of September of last year to the lowest point of January of this year. But I think it's time to get rid of it. It was doing a good job. Now I think we're just stuck in between the EMAs. And look, I think what I'm going to do here is, if I want to go for some higher levels, pretty straightforward. I need to see a clearance of this territory right there. Somewhere around that 200-day EMA. For the downside, well, I think maybe, just maybe, this 1.2550 zone could be something to watch today. If we can get a nice clearance of that one, then it opens the door to this towards this upside line, taken from the low of the 13th of January. Now, this upside line is very tentative, so don't really focus on it too much. It's like I said, it's a little bit on the tentative side, but hey, still a good one to watch. Somewhere, basically watch the area always, you know, near a level, not the exact level. Let's jump into the commodity world, ladies and gentlemen, before I jump into cryptos. And cryptos are for dessert, as always. You know, cryptos are for dessert. Looking good here. Gold, look at this sell-off. I mean, oh my God, this is just like, I mean, wow. It is moving nicely to the downside. It is moving fantastically towards this. Now, the question is here, can we reach my 50-day EMA on the daily chart here? Well, look, this is roughly around the 2,800 zone. I mean, wow, what a spectacular month we're getting, actually. Look at this. if this by any chance somehow drifts towards that 2,800 zone, we'll get ourselves a very, very big doji here and on the monthly chart. And this is what I want to show you guys. So this right now, this is a monthly candle and we're drifting. So if we do drop somehow $50, like $55 right now from where we are right now. And today, like I said, it's quite doable because again, we have craziness. Maybe like I said, maybe PCs are going to come out in that way where you know, it's gonna strengthen, really strengthen the US dollar. And then yeah, we could see, you know, we could see gold maybe falling off the cliff here. Again, let's not rush into things. For now, I'm still kind of pointing a little bit more towards the downside, but I'm gonna be but wait. Let's have a look at this one. Wait, okay, we're near key support, right? Okay, actually that helps a little bit more. So if we do clear this territory, if we do clear this 2,855, 54 zone, okay, great. This kind of increases the chances for a possible further move south. Again, it's like I said, we're at a very interesting spot today. I'm curious if we can go in further, you know, slide further, and I think that the day could be quite exciting. Let's jump into silver. Silver is also near its upside line. Okay, we are near a critical area, and if we do clear this upside line, my next target is a 200-day EMA. Period. For the upside, now this level, I think it needs to go. It's no longer valid. I think it's time for me to shift my attention from that level. And what I would like to do here is maybe actually keep an eye on the 31.90 zone, somewhere around here. I think that could be a little bit better. It has been a good area of support previously together with resistance, so hey, I think I'll stick to that little area. Oil, look at this. Yes, we had a little bit of a rebound yesterday, but still overall we're on a decline, and that's why I said, you know, when I'm gonna wait until I'm gonna get into you know, into oil when I was covering USDCAD, because the Canadian dollar, well, the Canadian economy really strongly depends on kind of their oil exports. And look, they're gonna get some tariffs now, and maybe that's what's, you know, acting as a positive thing here for the WTI oil price, because maybe, you know, the price could rebound. Maybe, you know, this could like limit the amount of Canadian oil and blah blah blah, just kind of limit the supply base, the whole supply and supply demand thing, if that's the case. However, or make it, you know, more expensive because it's going to be, you know, it'll have a tariff. But again, I think that the market will find a way how to go around some tariffs, and I think that, yeah, that's going to be the case in my opinion. But look, what can I say? For now, I'm still bearish. I'm still aiming for that 67 territory. You know, that's my game plan. Has been my game plan for quite a while now, since like last year, and you know, I'm still targeting that area. And we're slowly shifting towards that. For me to get comfortable with the upside at this point, at least a push back above all my EMAs on the daily chart here is needed, not to mention already a break of this downside line. But look, step by step, slowly, and you know, then we'll go from there. But at the moment, the upside scenario is kind of slightly off the table. Natural gas, quick update, around $4. Yep, we're near this upside line. Look, I talked about this, and I said to you, I'm keeping an eye on this upside line. And I said to you, look, if we're, you know, if I want to consider some lower levels, a drop below this upside line is required. If we can get that move, amazing. You know, more sellers here could join in. Coffee, very quickly in coffee, beautiful technical analysis here. Look at this hold up, and now the question is, are we going to get that rebound or not? So I'm not rushing into things. I'm leaving this one. I'm leaving it for next month. Honestly, I'm not really touching this today. In general, I'm not going to be touching a lot of things today. I'm just, you know, observing gold actually. And that's for me the main focus right now. But you know, maybe with gold we can play around a little bit. But But again, and no, in no way this is like an invitation or anything like that. No, it's just I'm saying from my side, you know, because again, with other ones, I'm really struggling right now. Like, I mean, because it's way too risky, tricky, and you know, and I do like other instruments, but it's just that at this point today specifically, it's not like for me. But I like coffee here. I mean, look at this technical scenario. Let's see if we can break that upside line together with the 50-day EMA. If we can, this opens the doors to some lower levels. Sugar, oh my God, look at this. Stronger dollar effect. There we go. Boom. I said to you, if we do drop below the 19 zone, I'm leaning towards the downside. There we go. There we go. Beautiful decline here. And look, what can I say? I mean, there is still potential for this one at some point later on, but at this point, I think let's allow it to settle, and then we can do something about it. Let's jump into the crypto world before I run out of time, ladies and gentlemen. Bitcoin, boom! Look at this. So far, so good. And because why? Because mission accomplished. Because I said to you before that if we do drop below my lower side of the box here, below the 100-day EMA, my next target is the 200-day EMA. Tick, tick. We reached my 50% of retracement here on the Fibonacci, which is drawn from the lowest point of August of last year to the highest point of January of this year. We reached it. Fantastic, amazing. Now what's next? Next is basically this. So as long as we stay below the 200-day EMA and as long as we stay below that 50% on the Fibonacci retracement, my next target is the 61.8, which is roughly around that 72,150 zone. Well, basically you just kind of aim for that 72 zone, you know, 72,000 zone. I mean, I think that could be an interesting target. Are we looking at some much lower levels? I am looking at some much lower levels. And yep, I think that what we would like to see here is something like this. Basically, we have ourselves somewhat of an upside line here, and that one's drawn from the low of the 12th of October, something like that. I think that's quite a decent line to kind of mention. And yes, we're picking up on some of these. You know, it's a tentative line. Don't get me wrong. It's not really something very objective. It's something, you know, that I'm trying to find a potential target for. You know, with the help of which I'm trying to find a potential target. So that's what I'm saying. So as long as we stay, for example, below the 200-day EMA, I'm leaning towards the downside. For this month, Bitcoin is really suffering. I mean, look at this. Look at the decline. Look at the decline we're having. And if we are taking into consideration this upside line, which I just drawn, we still have some room for, you know, for a further decline. And I think that could be the case. I think we could end up traveling somewhere here, somewhere to this, you know, 72 zone, 70,000 zone. Well, again, I'm not saying that it will be, but there is looking at this from the technical perspective, it looks something like that. Ethereum, also beautiful decline, approaching key support zone near the 2,120 zone. Let's round it up here a little bit. So yeah, that's my next target, and then we'll go from there. Ripple drifting lower a little bit, holding off from, let's say, selling off heavily, and is currently resting slightly above the 100-day EMA. If we start falling below the 100-day EMA, I'm leaning for the 200-day EMA. Litecoin. Now, Litecoin, I do like a lot. And honestly, this one, look at this. Look at this thing here. It seems like it's a, you know, it's a total kind of different game plan. And what I'm loving about cryptos lately is that some of them are actually now behaving like individual, you know, normal individual instruments, where, you know, it doesn't mean that one falls and everybody falls after them. So that's what I love. And Litecoin to me is, like I said, it's something that I'm currently very much observing. And I'm loving the fact that, you know, we had this decline, you know, almost to this 100-day, towards this 100-day EMA, towards that 100 level, and we tested my upside line. We rebounded. I talked a lot about this already, and now, yes, we are seeing this nice push back up. So can it be maintained? Look, I would say this way. If we still see, you know, Bitcoin, let's say, crashing further, I don't really think that this could, you know, Litecoin could justify pushing further, you know, north. I think that maybe, you know, it would have, I don't think that it's going to crash as Bitcoin, but maybe it'll just slow down and, you know, start moving sideways, just because, like I said, it's now like a total different animal, and I'm loving the fact that it's a total different animal. So let's see how this is going to play out. Of course, at the moment, like I said, at the moment, we're stuck. I'm not either bullish or bearish because, again, because of the Bitcoin, because if Bitcoin continues to slide, like I said, this might, you know, slow down the progress for the upside progress for Litecoin. Let's jump into Dogecoin very quickly. So far, so good. Very happy, very technical. I said it before that, look, as long as we stay below the midpoint of this falling channel, I'm leaning towards the lower side of this falling channel. So far, so good. We're on the right track. Let's see if we can reach that, you know, get that tick perfectly. And Polkadot. Now, Polkadot is also quite interesting. So look at this. It's like Litecoin. It's also, you know, not giving up. It had a good run yesterday. Look at this. We managed to, you know, travel to the 5.14 zone at one point. Hey, look, I mean, it's not, like I said, giving up. My only problem is this. Okay, right, okay. This little formation, this decline here, this candle to the downside, this Monday's candle to the downside, Tuesday, Wednesday, Thursday candle to the upside. All right, okay, it's called the bearish 3 method, if I'm not mistaken. Yes, so basically that's what I'm talking about, the bearish 3 method, or sometimes it, falling 3 method, or, rising 3 method. But I call it the bearish 3 method, basically. And yeah, it's, I think that this is, like I said, this is something to keep in mind, because again, it's when you have the body of the 3 consecutive candles within the body of the the first candle. So you have the body of the first candle, which is a big one. Then the other 3 consecutive candles are within their bodies are within the first body, in the kind of same range. And that's where you get that negativity. So that's why I'm not rushing into, okay, I want to see if this is, but this can be avoided if we do actually see a strong push, and if we don't see the, this fourth candle here, the body of the fourth candle, if it's not going to remain within the first body here, with in that range, then we can scrap this bearish 3 method idea. But if it does stay, then we have to be a little bit more on the careful side. And finally, for the last one, Bitcoin Cash. Bitcoin Cash I like as well, very much. And it's not like Bitcoin. I'm loving the fact that it's like that. But I have to say that, look, again, previously I talked about this descending triangle pattern. I said that if we break the lower side here near the 310 zone, I'm going to lean towards the downside. My next target will be the 272 zone-ish, approximately. Tick. Now, next. Are we not examining now a bigger descending triangle? Hey, could be the case. But then, either way, doesn't matter. Descending, not descending triangle. Either way, I need to see a drop below the 272 territory in order to get comfortable with the downside, because a forthcoming lower low will be confirmed and we will be entering areas which we last time saw. Let me just show you what I'm talking about here. Last time saw somewhere back in, in February of 2024. Or maybe even we could go somewhere, further south here. Again, could be interesting, because again, like I said, this whole euphoria, the way you want to, doesn't matter how you're going to say it, or maybe it does matter. If somebody can drop me a message, where do you put the stress? I put it in euphoria. Anyway, maybe I'm wrong, but anyway, the whole excitement with Trump being very pro crypto, it's kind of fading away, and I think that the world did not really get what they wanted to get from all this, and everybody was like, wow, oh my God, Bitcoin's gonna travel to 250,000, 200,000, oh my God. So, look. I was talking about this with my previous colleagues, previous analysts. I said that on Bitcoin I will have a target of around 107, maybe something like that. amazing. It was the Fibonacci extension that was working out, and then I will see. Because I really doubt that the 150, 200 could be, you know, that those levels that, you know, we could be hitting anytime soon. I think that it needs a bit of retracement, you know, so that it would become attractive again. So, ladies and gentlemen, that's it. That's kind of it for this session, and that's a wrap. I hope you found it useful. I hope you found this session useful. I really appreciate your time. Jindao, once again, as always, a massive thank you for your comments. I really appreciate that. Hope to see you soon. Well, hope to see you soon in terms of at least in the webinar. You know, we'll discuss. But hey, ladies and gentlemen, thank you very much, everybody. I hope you'll have a fantastic trading day. Just to let you know that on Monday we're not going to have a session because I'm going to be away. We're going to have a session on Wednesday, so we'll resume on Wednesday and then Friday. So yes, thank you very much, everybody. Like I said, be careful today, stay safe, have your stop losses in place, risk only what you can afford to lose, don't overtrade, and everything will be fine. And I'll see you on Wednesday next week. Thank you very much, and bye-bye.